You know what is interesting about the stock market? Most people only notice companies that are loud, companies constantly in the news, everyone keeps talking about Infosys, TCS, Wipro, and that's where things get interesting because while everyone was busy discussing AI and large IT companies, one smaller company quietly kept going. Higher profitability, low debt, strong cash flows, consistent execution. Just numbers quietly improving year after year. That company is eClerx Services. And when I first started reading about this business, I kept asking myself one question: how is nobody talking about this? Because sometimes the biggest winners in the market don't look exciting in the beginning. They just quietly compound over time. Now here's the interesting part. eClerx Services is not a traditional IT company. It doesn't mainly sell software like Infosys or TCS. Instead, it helps global companies run operations efficiently. Think about large banks, telecom companies, retail brands. All of them generate massive amounts of data. eClerx helps process that data, analyze it, automate workflows, and improve operational efficiency. In other words, they help big companies save time and money, and that creates sticky clients. The company currently has an ROCE around 25%, which is excellent. You ask why? Because it means the company is very efficient at converting capital into profits. Debt to equity just around 0.15, which means the company is not heavily dependent on debt. Revenue as of March 25 was 898 crores, whereas in March 2026 it has an revenue of 1107 crores, which means there's a revenue growth of 23.3% and profit growth of 24.4%, which is very strong. While margins also remain strong, this combination is rare. Growth plus profitability plus low debt. This includes the component which is required for a future multi-bagger. Is this a high quality business? There is no big consumer brand, there is no viral product, there is no AI hype narrative. But institutional investors love predictable, and eClerx has exactly that. The company operates in a niche where execution matters more than marketing. And once clients trust them, switching becomes very difficult. That creates recurring revenue. AI disrupts this industry. See, no company is quite perfect, and this is important. The biggest risk for eClerx could actually be AI, because if automation tools become extremely powerful, some operational outsourcing work may become. Can AI? See, no company is quite perfect, and this is quite important. The biggest risk for eClerx could actually be AI, because if automation tools become extremely powerful, some of the operational work can be taken over by AI. Second risk, client concentration. When you serve large enterprises, losing a few major clients can hurt growth. And finally, the stock is no longer extremely cheap. Its PE ratio is around 22 to 24. Not expensive quality, but not cheap either. So future returns may depend heavily on execution. Three of quiet compounders. Compounders usually win slowly. The market has a strange habit. It overhypes exciting stories and underestimates consistency. But wealth creation usually comes from business that quietly execute for years. Discipline execution, the company reminds me of that category. A company that may never become a meme stock but could continue compounding steadily if management executes well. And honestly, those are sometimes the best businesses to own. Is eClerx services a hidden gem? Maybe. The company has strong ROCE, low debt, healthy margins, solid growth, and a niche business model. But investors also need to watch AI disruption, client dependency, and valuation expansion. Personally, I think this is the kind of company that rewards patience. Sometimes that's exactly how real wealth gets created. Enjoy this video. Kindly subscribe to my channel. Thank you.